Everyone, today we will see regarding full reserve banking and fractional reserve banking. Before getting into the details of these two types of banking, we should know the type of deposit. We have two types of deposit. One is time deposit and second one is demand deposit. Time deposit means there will be a fixed time period when a person is depositing money, and when the deposit is getting mature, they will get their money back with interest. So a person will be depositing their money for a period of time. It can be 1 year, it can be 2 years, any number of years. So once the period of time comes to an end, the depositor will be getting their money back with interest, and before that they will not be able to withdraw their money. In case of demand deposit, this is not the case. In this type of deposit, depositor can take their money back at any time. So there is no time limit for demand deposit, whereas in time deposit there will be a limited time before which the depositor will not be able to take their money back. So now we will move into the full reserve banking and fractional reserve banking. First, let us see what is full reserve banking. In full reserve banking, the bank will lend out, or the bank is allowed to lend out the deposit which is received through time deposit only. So bank will be having two types of deposit with them. One, the money that they got through time deposit, and also the money that have through the demand deposit. In this case, the money that they are having through the time deposit, or bank will be able to lend out this money to the people, whereas the money that they are having through the demand deposit will not be allowed to lend out to people. So this is what is happening in full reserve banking, and in this case the depositors are safe, as they will be able to withdraw their money at any time, because their money is safe in the bank and they are not lent out to the people. So whenever they want money, if they are approaching the bank for their money, demand depositor will be getting their money back whenever they want. Okay, but in case of fractional reserve deposit, what bank does is that they will be lending both types of deposit that they are having. I mean both time deposit and demand deposit, they will be lending out to the people. Okay, so in turn they will not be having enough money with them. So if more than or so many people are approaching the bank, I mean demand depositors, so many demand depositors approaching the bank and they want their money back, sometimes bank will not be able to give their money back, as they do not have enough money storage with them. Okay, so this is the difference between fractional reserve banking and full reserve banking. In full reserve banking, the demand depositors money they will not lend out to the people, whereas in case of fractional reserve banking, the bank will lend out the money of demand depositors also. In case of full reserve banking, demand depositors will be always getting their money back at any time, whereas in case of fractional reserve banking, the depositors, demand depositors, there is no safety of the demand depositors money, that they may not be able to get their money whatever may be the time they wanted. Okay, so in case of full reserve banking, the money is safe with the bank, whereas in fractional reserve banking, this safety cannot be assured. So this is what regarding the full reserve banking and fractional reserve banking.